Hello guys, welcome back to my YouTube channel. This is another video on my YouTube channel, and like I told you, I'm gonna be breaking down two trades. The last win that I got on gold, which is a $1,000 win, and then the last trade I took, which is a loss, which was around $450 loss. And then the third thing I'm going to talk about in this video is what I promised last to talk about on my next video, which is how the market takes away from the impatient and then gives the patient, right? So, and I want to say one more thing, please. You guys should just subscribe, like, and share this video because it motivates me to keep coming on here and then giving you values, right? So without wasting much of your time, we're going to go straight to the first one, which is the $1,000 trade that I took, right? Okay, I just wanting to make sure my video recorder is on, my screen recorder is on, right? So let's just go to the first trade, which is from the weekly time frame. Like I do on my previous videos, if you've been following me, you see that I get my trades from the higher time frames, right? And that is where I see the order flow and know what happens, right? So without wasting time, let's go to the weekly time frame. 1 week. 1 week. First of all, what I do on my trades is identifying the order flow. From what we can see here, we can simply see from the weekly time frame, which is a higher time frame, that we have a bullish order flow on gold, and it's been happening that way. Since we're having a bullish order flow on gold, what I'll only look out for is buy opportunities, right? Points of interest that I am looking out to see price pull back to and then continue going to the upside, because what we have here is a bullish order flow, right? So the last trade I took was from this particular fair value gap, right? As you can see, my fair value gap indicator is on. If I should put it off right now, you won't see it. But right now, putting it on helps me know or see without stressing my eyes too far where fair value gaps are, because I trade only from fair value gaps, right? So this was the trade that made me $1,000 on gold, right? And this trade was framed from this particular weekly time frame fair value gap. Let me put off my indicator to keep my charts clean, right? So this was the weekly time frame fair value gap. Then from the weekly time frame fair value gap, if you've been following my videos, you would know that from the weekly, I go down to the 4-hour time frame to figure out the price action that I need, which is my edge to continue taking the trade, right? And if I don't see these price actions, I won't take the trade, right? I'm going to make this video very short to be able to accumulate these three things I want to talk about on this trade, which is the first trade that I won, the second one that I lost, and then the third topic, which is showing you how markets take away from the impatient and then giving the patient, right? So without wasting time, let's go to the 4-hour time frame. 4 hour. Yeah, coming to the 4-hour time frame now. This is that weekly time frame fair value gap that I identified from the higher time frame, right? What do I always want to see in this fair value gap? If you've been following my previous videos, you would always see that the same thing repeats itself here, and I always expect to see the same thing, right? Which is my edge. Once you find something that resonates with you in the market, you don't need to continue beating about the bush or looking for other shiny objects in the market. If you've been following my previous videos, you would always hear me say that keeping it simple will save you a lot of stress and a lot of noise from the market. So without wasting time, price came into this weekly time frame fair value gap, and I was looking to see my confluences that would help me understand that this is what I'm looking out for. And if it happens, I would confidently enter my trade and then continue longing gold to the upside. What was that? According to my previous videos, the same thing is repeating here, right? Price came into this fair value gap, And then I was expecting to see a 4 hour time frame fair value gap out of this particular weekly fair value gap, right? After that fair value gap was created, price tapped into it, right? Let me just put on my fair value gap indicator or imbalance indicator for you to see what I'm talking about, right? This is the weekly time frame fair value gap, right? After price mitigated into this weekly time frame fair value gap, price left off and formed a 4 hour fair value gap here. As you can see, this is a 4 hour fair value gap, which is one of the confluences I expect to see before I enter a trade, right? So to make it bolder for you to see, weekly time frame, tap in, and then price leaving the weekly time frame, it left a 4 hour time frame fair value gap, which is confluence number one, then tapped in and then broke this particular high that brought price into the weekly time frame fair value gap. I don't know if you understand me. This is what I've been repeating in my old videos and all the ways that I've accumulated on gold all this while. This is exactly the same thing that I'm repeating again, which is actually quite simple. Trading should be simple. Trading is not a rocket science or anything. It should be very simple. But the hard aspect of it is where I'm coming to, which is the second explanation of how I lost $450 on gold, right? So my first confluence was this fair value gap going out of the weekly time frame fair value gap, right? Price respected it and continued moving up, right? And then the second confluence is this high that brought price into this weekly fair value gap, expecting it to be broken above, right? Once I saw price break this particular high, what I did was enter this trade, right? And as you can see, without a drawdown or without wasting much time, price moved straight to my take profit area. And that was how I made $1,000 on the last trade. Now, we're about to go to what people do not want to see, right? But this is the reality of trading. I'm going to come on here and show you my trades. I'm going to be transparent enough, right? Just like every business, there are wins and losses in business. Just like you expect to make profit in business, you expect to take losses in business too. And there are factors that could determine losses in business. In the same way, there are also factors that could determine losses in trading. Taking a loss in trading doesn't mean that you didn't do what you know how to do, or your technicals were not perfect, or you didn't actually see exactly the same thing that you saw on the last trade before taking this trade. Okay, so why did I lose this trade? That there are factors that can actually cause a loss, even when you follow your plan, even when you trade according to your plan, even when you do exactly what you used to do. There are some reasons that can actually make you lose a trade, right? So this is the game, and losses are part of the game, and we learn from our losses. Because without learning from our losses are going to keep maximizing, right? So without wasting time, let's just go to that trade that I lost $450, right? So for clarity, I'm going to take out a couple joins from this chart, right? I'm going to take out a couple joins from this chart, right? So that we'll just focus on what we're talking about here, right? This is actually the loss, the $450 loss trade that I took, right? So what did I see on this trade and why did I take this trade? It's exactly the same thing that I've been seeing on other trades, but then why did this one hit a loss, right? So let's go down to the daily time frame. This trade was taken from a daily time frame fair value gap this time, not from a weekly time frame fair value gap. Because when I took this trade, the weekly time frame fair value gap had not formed yet, right? So let's just go down to the daily time frame. One day, one day. So from the daily time frame fair value gap, from the daily time frame, we can clearly see a fair value gap, which is a point of interest that I was interested in to continue taking this trade to the upside. Again, the order flow of this daily time frame is what? Is bullish, right? The market is still bullish right here, right? So being that the market is still bullish, I'm expecting to continue taking this trade to the upside, right? So what did I see here? When price moved up, it left a gap, right? And this gap is at the top of a support. this particular high was broken and then it turned into a support, right? And then there is a daily fair value gap there. Confluence number one, this high being broken with a strong bullish candle. Confluence number two, leaving a daily fair value gap. So this is actually what I'm interested in because I trade only from fair value gaps, right? So when price came into this fair value gap, I moved down to the 1 hour time frame. Remember, just like in my old videos, from the weekly time frame, I moved to the 4 hour time frame to figure out a price action that I would see or that I need to see, which is my edge to continue the trade, either bullish or bearish, right? So from this daily time frame now, I'm going down to the 1 hour time frame, right? So let's go down to the 1 hour time frame to see what I'm talking about. So here, this is the 1 hour time frame, right? As you can see, price being fractal means that price does the same thing in every time frame. But as an experienced trader, what you need to understand is when you see it in this time frame, what are you going to be looking out for? When you see it in this time frame, what are you going to be looking out for? So when price came down into this is that daily fair value gap that we're talking about. When price came into this daily fair value gap, right? Price started showing me the confluences that I need to take this trade to the upside. Once again, right? Price started moving up, left a gap. This was actually the first gap, right? If I switch off my what is it called, imbalance indicator. Another word for imbalance without getting you confused is just fair value gap, right? Fair value, right? So when price moved into this daily time frame, fair value gap, you see the price starts moving up, right? After price started moving up, price left us a gap here, which is confluence number one once again, right? Price left us a gap here, which is confluence number one. Let me still turn on the imbalance indicator for everything to be understandable, right? Price gave us the first gap here. I was like, okay, confluence number one. And then price continued moving up and then gave us another gap here, right? And then the second confluence that I'm actually looking for is this particular high that brought price into this daily fair value gap to be taken out by a 1 hour time frame candle, right? So as you can see, price smoothly and beautifully took out this high that brought price into this low, right? Like you all know, if you've been following my previous videos, this is the only thing I want to see from, and it's actually my edge, and then I take a trade, right? So when it happened, I entered this trade from here, right? And then I was very, very observant of this particular fair value gap that is here too. I think I have to remove this second join too. Yeah, so this particular fair value gap was where price moved into. I was like, okay, price decided to retrace this time. Unlike the other one, price never retraced into any fair value gap after it broke the high and moved straight to our TP. And that is why I always enter after the break, right? Because sometimes price doesn't actually pull back into the fair value gap that was formed in the entry time frame. Sometimes it continues moving because of how volatile gold is, right? So I entered this trade from here. Price actually moved back into this particular fair value gap that was formed in the 1 hour time frame. I was like, okay, this might be an opportunity to get a second entry if I see the price action that I need on a lower time frame, which is not this 1 hour time frame. Remember, from the daily time frame, I was expecting to see a price action that would help me enter a trade on the 1 hour time frame. Then from this 1 hour time frame, forming a fair value gap that price tapped into, I went down lower again to know if I can see a reason to make a second entry or to double my profits on this trade, right? If you've been following my video, you would see in the last video, you would see where I broke down a trade that I took, that I actually entered a trade. I actually doubled my profit on the trade, seeing a price action that helped. So if you've not watched that video, you should go there and you will see what I'm talking about, and you will see how I got this particular second entry. This was actually the first entry, and this is the second entry, right? So when price moved into this place, I found a reason in the lower time frame to enter again. And that reason is this high being broken. But I wouldn't go back to that lower time frame because I talked about this kind of thing in my last YouTube video. In case you've not watched, you should go and see what happened there and how I entered that trade. Right? That is exactly the same thing that happened here. Price being fractal. Right? So when I saw that, I entered again as my second entry. Right? I entered this trade on Thursday, and then this second entry was on the same Thursday, right? Then price started moving to my direction. As you can see, price respected this level gap, gave me a reason to enter again, and then started moving to my direction. But that didn't last. Price just moved to this point and then started consolidating. But before that, I wasn't on this trade. Like normally, how I do is once I enter a trade, I just set an alarm on my take profit area, and I set an alarm also on my stop loss area. Why do I do this? I do this to keep my head off the trade. I do this to zoom out of the trade. I do this to get out of the chart. I do this to as in to as in remove myself from the thoughts that I'm on a trade. What if it goes well and what if it doesn't go well? Right? For you to be profitable or for you to be profitable long term in trading, you need to learn what we call set and forget, especially if you trade my style of trading, which is a swing trading style, right? I can be on a trade for 1 week, I can be on a trade for 2 weeks, right? And I wouldn't ever look at that trade until the alarm of that trade rings. Then I will go check my phone or check my laptop. Which one rang? Is it the stop loss alarm or is it the take profit alarm? Then I would know what happened on that trade. So why didn't this trade go exactly as I planned? Right? Being on this trade, all this while I've been on gold buys because I know the economic reasons that would affect my trade positively or negatively, right? I know what to look out for economically. I know what to look out for politically. I know what to look out for fundamentally, not just technicals, right? If you're the type that always wants to be on technical analysis, yeah, I've seen what I'm looking out for. I would always enter the trade. Man, I'm not sure you're going to be successful for a long time in trading. But when you understand the fundamental reasons why that, or you understand the, the apart from the technical reasons, you're understanding fundamentals, the fundamental reasons that might affect your trade positively or negatively. That is when you are on the upper hand than someone that is just trading technicals, right? So, being that I've been on this trade, I was just observing the fundamental reasons that might affect my trade positively or negatively, right? So on Friday, I started seeing a news about China or rumors about China negotiating tariff with the US, right? All this while I've been on gold buys based on that tariff reasons. When the pressure of the tariff, when the pressure from Trump on tariff was very, very high, what investors do in this situation is going to safe havens, right? They buy gold, they buy silver, they buy precious metals, they buy things that would, as in, they would take profit from because of dollar depreciation, right? So when Trump was talking about tariff, striking tariff on China, countries like China, Canada, and other countries that he mentioned, that was where I was taking good buys from, not just technicals, right? That was where I was taking good buys from. I see the news and then use it as a confluence. And then once my technicals play out too, showing me a price action that's news is actually going to, as in, to support this particular price action I'm seeing, and then I enter the trade. So that is how I trade. But in this case, I've been on this trade before there was a change of news on that Friday. I started seeing the news about China trying to negotiate that tariff with Trump and all that. So the safe haven buyers of gold or the investors started thinking twice about the risk of buying gold, started thinking twice about the risk of not buying dollar back, right? So price started moving down from here, and that was just the reason why we lost this trade, right? So, but when this was happening, because I know the what might possibly happen in a greater percentage of that news, the effect of that news, that it might affect my trade negatively, I had to close one position. And that was why the loss was small, right? And that is experience for you. When you've seen something like this, when you understand the news, you know how to cut your losses short, right? So I had to close one of these positions. Then I left this one. Why I left this was that anything can still happen in between, right? There might still be a change of news, but I'm already on this trade. But I never had to be like, be an emotional trader here and be like, I'm not going to close any position, even with the news that is coming up, right? About China US tariff negotiation. So I had to just close one position and then leave the first one to run in case there is a change of news, right? But that wasn't the case, unfortunately. Price continued to do its thing. From that Thursday, it took 1 week consolidated. After too many consolidation, it then took me out on another Thursday, which was on the 1st of March, right? I entered this trade on the 24th of March, which was Thursday, and then price took me out on another Thursday, which was on the 1st of March, right? And that is swing trading for you. That is my type of my style of trading. When you take this kind of loss, what happens to your mind? If you followed your plans, if on your plan book everything is checked, all your confluences are checked, right? You have no reason to worry. In fact, you have no reason to look at your trade when you're on a trade, to look at the chart when you're on a trade. You have no other plan to make. Every other plan that you need to make had already been made before you enter a trade, right? So entering a trade and watching it to replan again is just something that would make you unprofitable in a long term, right? Because you would make so many mistakes trying to do this, right? Remember, keeping it simple would always save you a lot of stress and a lot of noise from the market. So this was actually the reason why price took us out here on Thursday, right? Then the second reason here is that when price closed on the weekend, you would see how price closed and you will see what happened there. Let me zoom it out a bit for you to understand what happened here. You see, this is actually that daily fair value gap that I entered this trade from, which price took us out, the $450 loss trade, right? This is the fair value gap. But let me turn this imbalance indicator on for you to see something. You would see that around that daily fair value gap, below it, where my stop loss is, exactly is where this weekly fair value gap formed, right? And when I saw this when that week closed, I was like, this trade, I even told my friends that were on this trade with me, I was like, bro, this trade is going to more likely take us out because a weekly fair value gap formed below my stop loss, right? And with the news that I'm hearing and how the weekly candle closed, the weekly candle closed as a consolidation candle instead of maybe a bullish candle. It actually closed as what is a consolidation candle? When we have a wick at the top and we have a wick below and then a small box of a candle in the middle. That is consolidation. If you go down some time frames lower, you would see that price actually consolidated here. So that is what we call a consolidation candle. So these were reasons why I felt like price is going to definitely take us out, right? You can see for yourself. You can see for yourself that this is that weekly time frame fair value that I'm talking about. So I just did the join now. So I'll show you what happened. I'll show you from the 4 hour. Okay, let me just do another drawing here for you to see. This is another weekly fair value gap that price might fill, right? So yeah, So without making it look like it is something else, a weekly time frame fair value gap is actually a stronger magnet than a daily time frame fair value gap. But I was on this trade already before this particular weekly fair value gap formed because I saw the price action I needed, and then the news came in too, right? So this was actually why we lost, or why I lost this why I lost this trade, right? Because I'm not sure any. Okay, my friend took this trade with me too, right? So this was actually why we lost this trade, right? The news on the tariff negotiation, and then this fair value gap forming inside the daily fair value gap, the weekly fair value gap forming inside the daily fair value gap, which is a stronger magnet, then forming below my stop loss, right? So all these things are the factors I considered at the end of that week, and then I had to close one position from this trade to be on the safe side. And then what I thought actually happened exactly the way I thought it would, right? You see how price took me out. You see that my stop loss is actually around after the weekly fair value gap formed. It happened that my stop loss was just where it formed. And I was actually anticipating that this trade was going to take me out. And that was why I closed one position from this trade, right? So as you can see what happened here, price came down to the weekly time frame. Price came down to the weekly time frame fair value gap. So I just had to extend it for you to see what happened here. We're on the 4 hour time frame now. I'm no longer interested in going down to the 1 hour time frame because we are now trying to see what would happen from a weekly time frame fair value gap, right? So when price came into this weekly time frame fair value gap, we see what happened here is that it broke the weekly time frame fair value gap, moved up, and as you can see how price closed is actually looking like it's about to use it as a resistance to continue coming down here, right? But at the end of the day, if we see price move up from here, what I'll be expecting to see again as my confluence number one is a fair value gap around here, which is outside this weekly fair value gap, and then a break above this particular high, this high that brought price into this fair value gap. Then, if this fair value gap is not used, if it's actually now used as a resistance, what I'm actually going to be expecting to see is price mitigating this second weekly fair value gap. This is another fair value gap here. This is a weekly time frame fair value gap. I don't know why my mic is coming on and off. I just hope the sound is going to be clear after this. So this is actually the second fair value gap. So what I'll be looking out for next week is to see if price would keep going up from here and then breaking this particular high that brought price into this low, right? And then I would confidently enter these longs again to the upside, right? I will confidently buy gold again to the upside, coupled with fundamental reasons, not just technical reasons, right? So I'm actually showing you, bringing out some secrets gradually. I don't just trade out of what is it called? I don't just trade technicals. Once you learn technicals, you need to understand at least a little of what would affect your trade. The factors that can affect the pair you're trading is very, very important, right? Knowing that if this happens to dollar, if dollar is going negative, should be going positive. If there is a negative news on dollar, it means good news on gold. Then, if you see a good price action from your technicals, then the news or the fundamental reason supports your technicals to be more confident to keep holding your trade or to enter your trade, right? But in this particular case, in this particular trade of the trade we lost, case of the trade we lost, you see that we've already entered the trade on the 1 hour time frame from the daily fair value gap before that particular news came when we are already on the trade, right? What I did was to manage my risk by closing out a position and letting the other one run in case there is a change of news while I'm already on the trade, right? So that is exactly how we lost $450 on that second trade on gold. Then the third thing I promised to talk about before I end this YouTube video is how much the market takes from the greedy the impatient, and then gives to the patient, right? It's actually very normal for you to try to make money every day from trading, but that is not exactly how it is, right? I'm not going to be coming here to be lying to you or to be showing you shiny things. I'm going to always come here to show you that trading is possible. I make money from trading, it makes me money, right? But it is not just a bed of roses. Just like every business, like I said before, there must be a time where you encounter loss. And there must be a reason for that loss. Because now you know what you're doing, you've got your edge. But when you see a loss, it shouldn't bring you down since you followed your plans, right? So, yeah, talking about the third thing I said I'm going to talk about here is how the market takes from the greedy and gives or the impatient and gives the patient, right? So let me delete some of these joins to keep my chart clean, right? So let's go to this example. I'm just going to give one example for us to quickly leave this video. And then why I like making my videos short is that after the video, if there is something you feel you've forgotten, you can actually go and rewatch the video again than making it too long and boring, right? So we're gonna take this example from here, right? So one thing you need to understand is this: when you're looking to take a trade from a particular point of interest, which is your context time frame. When I mean context time frame is a higher time frame, then your entry time frame is the lower time frame where you would want to see a price action to enter the trade, right? So in this particular case, this is actually a scenario of how the market takes from the greedy or the impatient and gives to the patient, right? This here is a daily fair value gap, right? This is a daily fair value gap. My fair value gap indicator is still on. So you see so many fair value gaps here, but I'm going to switch it off now to make the chart a bit clearer. So this is a daily fair value gap. Let me go down to the daily time frame for you to see how the markets tricked the impatient traders here. Yeah. So this is that example I'm talking about. I'm going to put out my indicator again. So from here, you would see that this is a sweet daily time frame fair value gap, a very nice daily time frame fair value gap here that I just clicked on. You see, this is a daily time frame fair value gap, right? An impatient trader or a trader that doesn't know how the market works would always be like, okay, we've tapped into the weekly, daily time frame fair value gap. Let's see a price action that would help us enter this trade and then move it to the upside, right? So then forgetting that the weekly time frame is below it. Whenever I see a daily time frame fair value gap, right? Check below it if it's in a bullish scenario, check below it to see if we have a weekly time frame fair value gap that would trick you out, right? A lot of traders know this, right? But because of impatience, because of greed, because of fear of missing out, that is the word I'm actually missing. Actually missing. FOMO is the reason why the market takes away from the greedy or the impatient and give to the patient. FOMO is fear of missing out. FOMO is the fear of missing out, right? So when price came into this daily time frame fair value gap, going down to the 1 hour time frame fair value gap, you would see that price gave every action it was supposed to give. Let's go down to the 1 hour time frame. Price gave every price action that it was supposed to give and then continued to move down to take away the impatient trader, right? To take from the impatient trader and then give the patient trader, which is us, right? So this is actually that fair daily time frame fair value gap, right? You see what price did. Let me actually zoom out for you to see clearly. Zoom out. I intentionally left this box here for this what is it called today, for this YouTube video today, right? For you to understand what I'm talking about. So see what price did here. See what price did here and still took the impatient trader out, or still took market from the impatient, still took money from the impatient trader and then gave to the patient trader, right? So as you can see, the same price action that I always enter the market with is exactly the same thing that happened here, right? So this is actually where the entry was. This is where the stop loss was for the impatient trader, not for me, because I didn't take this trade, because I know what happens in this kind of case. So when you see this kind of thing, you just ignore it, right? But an impatient trader would be like, what if this trade keeps moving up? You know that from your trading plan, you have a weekly time frame fair value gap below, which is a stronger magnet here. But you'll be like, man, all the price action just happened here. Why wouldn't I just enter this trade, right? See what happened. It's not even up to a one-to-one risk to reward trade. And see what happened, move, and see what just happened in the end. Price came into this daily time frame fair value gap, right? Which is this particular box here, right? Came into this fair value gap and started moving up, right? The confluence you need if you're trading like me, a daily time, a week, a 1 hour fair value gap out. You see this fair value gap that formed there, right? Yeah, and it's actually the first confluence, right? Then this high was the initial high that brought price down into this particular fair value gap. You see how it was taken out, right? So after it must have been taken out, the impatient trader would be like, wow, this is what I've been looking for. Let's go, let's go, let's go. Then because of impatience, you forgot that there is a weekly time frame fair value gap below, which is a stronger magnet that would take you out, right? Because of your impatience, you've already entered this trade from here. So price moves down and then it started tricking you like it's going to move to the upside, right? And then it moves just a little bit up to this upside, right? And then what happened in the end? Price continued coming down. Price just came down and then drastically took the impatient trader out. And then what happened? Let's go down to the 4 hour time frame, because this weekly time frame fair value gap was where price finally, after it took out the impatient trader here, then price came down to the weekly time frame fair value gap, which is a stronger magnet, right? Let's go down to the 4 hour time frame to see the price action that happened there too. So you see, this was actually that trade, the impatient trader trade, right? And then you see how price took the impatient trader's money, because the impatient trader forgot, because of FOMO, because of price fear of missing out, forgot that there is a stronger magnet below that might take him out, right? So after he was taken out, price came into this particular weekly fair value gap and then started giving the exact confluence that we need to the upside. Came into the weekly fair value gap, left a gap, confluence number one, and then started moving up. Then this was actually the high, the first high that initiated all the moves that brought price into this particular weekly fair value gap. Right, let me just mark it out to make you understand what I'm talking about. Right, so this is the high. You see, so when price came into this fair value gap, left this weekly fair value gap, left this particular 4 hour fair value gap, the first confluence, tapped into it, respected it, continued moving up, and then took out this high that's initiated all this move into this fair value gap. That was when the patient trader entered the trade, right? And you see how price, after a lot of consolidation, continued moving, and then hit the patient traders take profit, right? So this is just one in a million examples from the chart, but I don't want this YouTube video to be longer than it's supposed to be. So this is what I promised I would show you guys in the last YouTube video about how price takes from the impatient and then gives the patient. In a nutshell, when you see a lower time frame fair value gap, or when you're trying to enter a market from a daily time frame context, which is a higher time frame, check if you have a weekly time frame below it. Because the weekly time frame, in so many cases, is a stronger magnet that would take you out. Even if you start seeing price actions from the daily time frame and you have a weekly time frame fair value gap below it, ignore that price action. Tell yourself that this is not what I'm looking out to see. I'm looking out to see price come into the major fair value gap, which is a higher time frame fair value gap and which is a stronger magnet. Right? Tell yourself that you need to be patient. Right? That is trading for you. Trading is about discipline. Trading is about getting your mind right. And then you would get it right. Right? So that is actually how the market takes from the impatient trader and gives to the patient. Right? I hope you enjoyed this YouTube video and please like, subscribe, and share because that is the only thing that is going to keep motivating me to come on here to give you values, right? I'm not a comedian or a content creator. I know that anything about educational videos gets people bored, but this is the life I choose, right? This is actually the life I chose. And I'm going to actually see people that like what I do and then they will tap into it. So please subscribe, like, and share. Thank you very much and see you on the next video. And I promise to be a little bit more consistent on this YouTube video of a thing because I shouldn't be only posting or making videos when I take trades, right? I say it's not the way to go. I'm actually going to be from now on coming on here to at least maybe give you educational videos, even if it's not a trading, even if it's not about the trade that I took. I can actually come on here, you know, tell you something about the market, tell you something about the chart, or even preach to you, right? So, thank you very much. Peace out. See you next time.